Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Greg Wong, the CFO, Anthony Tétrault, and the chairman, Neil Seaman from RIWI Corp. RIWI trades on the TSX Venture Exchange under the symbol RIWI and on the OTC under RWCRF. The company is currently trading at $1 with roughly 18 million shares outstanding, or about an $18 million market cap. I now hand it over to Paul Andriola.
Great. Thank you so much, Trev. Gentlemen, great to have you guys back. Anthony, pleasure to meet you for the first time. Timing wise, we just saw that you guys just announced your financial results. Would love to talk about that. Would love to talk about a number of things, but why don't we, before we get started in that, why don't we just refresh everybody's memory and tell us again what RIWI Corp is all about?
Sure, and thank you, Paul. And by the way, congratulations. You're the first firm that we speak to after we release our earnings, which has only been about 50 minutes ago. So you guys are right on the point. So RIWI is a global trend tracking and prediction technology company. What it really means is we do global surveys, and we've done over 1 billion surveys in over 220 countries. What's really interesting about us is we have invented a technology, or actually Neil originally invented a technology called Random Domain Intercept Technology, or RDIT, which is a way of basically intercepting internet traffic and leveraging unused domains to gear people towards surveys that we create for our customers. So that's basically what we do.
Perfect. Now let's jump right into it. So it was, I believe it was Q1 numbers. I didn't even see the headline, but I'll let you refresh us with that. Give us a sense of what the sort of the financials look like, and kind of what 2021 looked like, and then we'll jump into sort of what you expect 2022 to look like.
Sure. So we just released our audited 2021 overall financials. We've not released 2022 Q1 yet, but we did for the year a little over 4.13 million in revenue, all in USD. Important when you're a TSX.V company and you're reporting in USD, it's a little bit different. You've got to sometimes do that mental conversion to Canadian dollars. We increased our customer base by 12%. We increased our revenue generating projects by over 50%. And we had a loss in the business of a little over 600,000 as we really focused on a number of things, improving our technology, building the company, and building new products to go to market with.
Right. And so clearly a bit of a transition year, because I saw in the headline that you guys are you're moving away from kind of the legacy type of contract or project type of revenue to more of a SaaS revenue. Maybe explain a little bit as to reasoning for that and kind of what that looks like.
Sure, absolutely. So I think it's we're going to our next step of evolution is probably more how I would think about it. We're going to continue to do project-based work for customers. We have a lot of customers that need discrete projects that only RIWI can do, or only RIWI can get access to the people especially in different countries that are hard to reach, that is maybe not an ongoing long-term survey, but is a discrete for a very specific purpose. So we'll continue to do discrete projects, but as an organization, we are migrating to do more of our business on a long-term subscription recurring basis. Part of it is we don't want to start every year from zero and then have to build again. So our goal is to build a recurring revenue base that we can continue to build on, quarter after quarter, year after year. It gives us more predictability in revenue, both for ourselves as well as for our investors. It gives us a better visibility as to what type of investments we can make, because we know what we're starting with. And it just gives us more stability as an organization. So what you're seeing us invest in, and we started this at the end of last year, is truly investing in a lot more subscription-based products that we can, basically do a survey one time, or on an ongoing basis, I should say, and then have multiple people subscribe to it. So there's definitely transition, and as every organization that's gone from either project or discrete license revenue to SaaS-based will tell you, there's a transition, right? You go from getting a lot of money up front to getting a smaller amount of money up front, but more predictive over time. So it's going to be a bit of a hit to revenue at the top line for some time, but what you'll see is over time, we should grow and enable us to grow faster once we get through this. I'll say the depth of the trough.
And I'm going to apologize in advance. We've got landscapers that just showed up outside here. You're going to hear some noise in the background. I'm going to mute myself as much as I can, but we'll manage through this. So why don't we peel it back a little bit? And you're a company that collects data, and I've had a lot of investors sort of approach me and say, okay, how do they really do that? I mean, it's somewhat sophisticated. You guys are able to go really into places where very few people can get into to collect this hard to reach data, but give us some more of the mechanics of how you guys go and get this stuff.
Sure, I'll turn it over to Neil in just a minute. He invented the technology, and I think he can go very, very deep on it. But I'll just correct one thing: we are absolutely a data collection company, but that is not all we are. We really have 3 steps in our process. Data collection is one. We do a lot of message testing, and then we also do a lot of campaign management. So it's when we think about it, data collection is often the first step of a multi-step process, but it's really only one step. With that, let me turn it over to Neil, and I think he's probably best equipped to talk about the details of the tech.
Thanks, Greg, and thank you, Paul. And great to see everyone. Well, I don't see them, but hear from people. Yeah. So briefly, this leverages this technology. Was born out of my old research unit at the University of Toronto. Leverages what I call the architecture of the internet, which is the domain name system, right? So what we're dealing with at RIWI is lapsed or dormant domain names. So these are on any digital content. So it can be on a blog, it can be on, a web-enabled device of any kind in any country. And what we do is when there's a client that wants us to ramp up in South Korea, right now we're one of the only companies in the world very active in Ukraine and Russia in terms of collecting continuous data. What we do is we leverage up and we have levers and partnership structures so that we make sure we get as best of a mirror of the web using population that's active. Of course, that's diminishing in places like Ukraine, very tragically, but we lever up those lapsed and dormant domains so people stumble into them. And it's kind of like a global digital mall intercept. So originally Gallup invented the mall intercept, the live mall intercept. We created it at global scale digitally. And what that does is it produces a beautiful random population that stumbles into those domains and is invited to answer a quick survey or message test.
Fantastic. And give us a sense of who are your customers? What kind of customers do you have? And, what verticals are you going after?
So we focus on 3 main customer verticals right now. One of them is financial services, one of them is international development, and one of them is health systems and just healthcare overall. Actually, we just announced as part of our press release, we just actually hired a new general manager to run our international development line of business. So maybe one of the highlights, not necessarily part of the financials, but an important announcement for us is the hiring of Natasha C. Natasha comes to us to run, and she starts on Monday. So, she hasn't started yet, but she will start on Monday, and she will be running our entire international development, which is currently our biggest customer segment. Within there, we've got the who's who of customers. We've got everyone from World Bank. We've got Digital Public Square. We've got a number of customers in financial services. We've got a number of customers, Bank of America and others that we've made some public announcements in the past. So there's a lot of customers in healthcare, the GHC3 project. Many of our customers don't allow us to make announcements, so I'm being a little bit careful on what names I throw out there, but you can see some on our website and you can see some through different announcements we make. But I will say we have very top pedigree customers, which helps us not so much from a marketing perspective, but really helps us from a referenceability. And when we start trying to win another customer, we can often bring them to bear because we have such a high reference rate.
Now, Greg, you just joined the company, I think just around a year ago, if I'm
6 months.
6 months. Okay. Yeah. What have you learned, and sort of what do you see as the good points and the challenges that you guys are facing as a business?
Yeah, so I think there's a couple of really strong points, and I think some of them I mentioned maybe in our first discussion a couple of months ago. But one of them is we have a really strong and passionate employee base. Our employees care about this work. They don't just come to work for a job, right? Many of them can get a job anywhere, but they come here because they have a passion for actually helping understand the data, helping organizations figure out, how we can help them. So in international development, for example, we help with, water security. We help with overall security, often food equality. There's a lot of, gender rights. There's a lot of reasons why people come and work with us, and our employees really do feel passionate for this type of business. I think one of the other things is the pedigree of our customers and the importance of RIWI to our customers. So I've spoken to probably 25, 30 customers over the last 6 months, and every customer, without exception, tells me how much they value RIWI and how much we've done really good work, which they couldn't find anywhere else. I mean, it does beg the question, could we be increasing pricing and doing all these things? But in many of the cases, our customers depend on us, and we're trying not to gouge them. We're trying to bring fair pricing to the market. So those are probably the two really strong big things: is how valuable we are to our customers and how passionate our employees are. Maybe on the other side, one of the things that we're trying to evolve into is more the subscription, long-term recurring revenue base. So traditionally, in a lot of our projects, there were surveys. And when you think about surveys, you think about them as being discrete. I'm going to do it 1 or 2 or 3 ways, but I don't think about it as ongoing long-term. The beauty about our technology, though, is it's real time, it's ongoing, and we don't ever have to turn it off. So we can create these long-term trackers and then provide trending patterns to understand how are things changing. So when inflation goes up, how does it impact, for example, some of our financial customers, the war in Ukraine and Russia, or some of the other conflict zones, right? We're able to do long-term trackers around geopolitical risk and understand over time what events cause what type of risk, and what's the impact on policy, what's the impact also for our financial service type customers. So this evolution to go from these discrete projects to subscription-based projects or products is not easy. It's a bit of a hit on our financials, and it's also a bit of a cultural change for us, because now we go from being called project-based to actually having to define products, understanding what products would be and what data products would be interesting for our customers over a long period of time, and what value does it generate so that we can charge the appropriate price, right? We don't want cost-based pricing, we want value-based pricing.
And, sort of looking forward, where do you think, is there any resources you need that are kind of missing? What do you still need from sort of the outside the business right now to continue to execute your business plan?
Yeah, I mean,
if anything.
Well, so we're a $4 million company, right? So you can imagine a company our size, we are under-resourced in every possible way and in every possible place, right? We can always use more salespeople. We can always use more development people. And there's a talent war out there. So acquiring people is a challenge, not only for us, but for every organization in the world these days. So I'd say we're having pretty good success in acquiring talent, because it's not just about money with us. People believe in the mission that we're going down. They also believe in the tech and our growth potentials. But we definitely are going to need to bring in additional capital and funds. As we said, we want to grow not only organically, but also through strategic acquisitions. So there'll be, bringing in more capital to the company to enable that will be important. And then just we're going to need more marketing. We're going to need to do a number of things to get the RIWI message out. So I think from an outside perspective, the only thing we will probably need is to do a raise at some point.
And speaking of getting hold of good people, you've got a new CFO, Anthony. Welcome. Anthony, this is a question for you. What you probably had a lot of choices, different places you can go. What brought you to RIWI? What did you see there?
Oh, definitely. It's really the people there, like Greg was mentioning. They're really passionate about what they do. It's really an interesting industry. I think what they're able to do and the value they bring to customers is very good. So it's definitely an industry I wanted to be able to work with.
Fantastic. Now, more and more discussions around acquisitions. I keep hearing in relationship with what you guys are doing. Maybe talk about that strategy. Talk about kind of what you're looking to do on the M&A side.
Sure. So again, as mentioned, we have two growth vectors. One of them is organic growth and one of them is M&A. On M&A, we are looking only at strategic acquisitions. So we're looking for acquisitions that are either technology that will complement our current technology and support our existing customer base, or be additional data sets that will complement our existing customers. So we're not a roll-up company. We have no desire to just acquire different companies, roll up revenue and say, here's our P&L. Our goal is always to acquire organizations that we can fully integrate into RIWI that can provide more value to our existing customers. So we believe that 1 + 1 = 3 in many cases. If we bring the right data sets or the right additional technology, our existing customers will benefit from it. So when we acquire somebody, we get new customers, we get new solutions, and we can then upsell our existing customers, as well as upsell the acquirer's customers with our type of technology. So we're really looking for strong synergies in any type of acquisition. If I go into a little bit deeper on a technology side, it could be things like panel-based type surveys to complement our RDIT type surveys. It could be, things like social media listening type technology. There could be geospatial type solutions that look at maps and everything else to bring in additional data to support our customers. So there's lots of technology type solutions, and on data sets, we have a number of customers that use us for one type of data, but they also go and acquire data from multiple other places. Social media is an easy one when you think about sentiment data, right? Survey is one type of sentiment data. But social media listening point information, being able to analyze it from places like Twitter, Facebook, other places, is another type of interesting type of data. But it's just another example. There's many examples of other types of data that we can bring in.
Mm-hmm. And there's more to that. Like talking about the overall industry, are you seeing trends? Is there a drive for a certain kind of data, or is there, sectors or even sort of specific things that customers are looking for that you guys can take advantage of?
So it really depends on the individual customer segment. It's very different by customer segment, but I'll use our Compass series of indexes we just released. So, in March, we released a new set of Compass, a new set of indexes, long-term subscription products with a partner, David Wu, right? He's a former chief economist at the Bank of America. Mm-hmm. And these are all about geopolitical risk. And if you look at the world today, whether you look at policy, you look at international development, you look at financial services, geopolitical risk, Russia, Ukraine, Israel and the other Middle East places, North, South Korea. There's just a number of places where risk will impact humanitarian issues as well as financial service issues. So, that's one area of geopolitical risk that we have identified that is in hot demand just overall, but also with our customers. Mm-hmm. As we look, and there's a number of others. One of the big things for financial service customers they're looking for is, can you bring in data which has a 5 to 10 year history? Because especially in quantitative firms and financial services, they're looking to be able to backtest data. So can we acquire data sets which have a history of data and that they can backtest and that we can then complement? And again, we've got a stable financial service customers. We acquire a new set of solutions, we can upsell them, but then we can also now get access to a whole bunch more quant-based customers.
Mm-hmm. Now, this is a question I always throw to Neil every once in a while. You guys are dealing with so many different areas, so many different types of data, all sorts of stuff. Is there any data recently that you saw that surprised you? And clearly there's data that you can't really talk too much about, but you've always got some weird little snippets of data that always is interesting to hear about.
I've got one or two, and then Neil, I'm sure you have. Neil always has many more than me. I mean, he really spent a lot of time looking at this, but there's a couple, and we announced one of them, but we were the first organization to announce that there was 10 million refugees in Ukraine. 3 million of them had already left Ukraine, and 7 million more were on the move still within country. That was 25% of the population. We also identified recently through our surveys that in Russia, even when people disagree with a policy, they support the leadership. So, our surveys in Russia right now, which we're looking for how much do you support the leadership and do you support the war, for example? Many of them didn't necessarily support the war, but they were 100% behind Putin. So, the narrative that we often hear that Putin is losing support in many areas, our data is showing something very different. And when you combine the signal of Putin having a lot of support regardless of any sanctions, and then the kind of data we're getting out of the Ukraine as well, it definitely leads us to believe that the conflict in the Ukraine is going to go on much longer. So for me, those were 2 points that were very different and interesting, especially when they came out. Neil probably has some additional thoughts and ideas as well. Neil? You're on mute.
Oh, yeah, thanks. Yeah, thanks. No, those are really good ones, Greg. I mean, I'll start with a bit of I guess, a downer, concerning one, and then what I hope is an optimistic one. So the first one was with respect to opioid-related teenage fatality deaths. This was just reported officially a couple days ago, I think, in the Journal of the American Medical Association. Extremely concerning data, right? And we were, I mean, we're proud of this from a predictive perspective. We're, concerned about it. We've been tracking with our partners in Pennsylvania, clients, just, intensity of stigmatized attitudes toward people who are using drugs or using alcohol in a problematic way, and that being a real barrier to access and clinical treatment. And so, that work, got us a lot of attention, and then that's all great, but it's very alarming. So we're starting to see that tie, so really concerned, but at least, focusing the U.S. government and other people's attention on that. The other interesting, and I'd say maybe a bit more optimistic, is in the context of endemic COVID. So just yesterday, the Fields Institute for Mathematical Sciences, RIWI's partner, announced our partnership with respect to a new national government, 3 branches of the Canadian government, funding for continued research around looking, in this case, at a wide number of countries. So historically, we were working to advise the Scientific Advisory Council in Ontario and others on what was happening in Ontario. However, what this is all about is what we've been starting to see is that in different countries, there's more resilience, basically, and there's some academic papers that kind of that sort of back this up. There was one in the Lancet in February, but basically the whole idea is where you can identify greater interpersonal social trust and greater trust in government authorities, you often find greater resilience. And so basically, the bottom line is you can learn from other countries at different stages of their endemic COVID. And so that's what we're plugging in with the math folks at the Fields Institute to really come up with these models around how Canada and other countries can be better prepared during the context of the current and future public health situation.
Perfect. That's great. Why don't we let's talk? Step back to the financials again. Is there, last year's financials? Is there anything that investors should focus on? What do you think are the key takeaways from last year's financials?
And Anthony, anything you want to, Neil and I've been speaking. Anything you want to bring up to answer that question?
I'll unmute myself. Sorry. Yeah, no, definitely. It's been pretty similar to let's say 2020. If you compare year to year, there's been a small decrease in revenue. Definitely, the company's changing, so you can really see that in the financials in terms of some costs have been increasing. And for sales, the team has been changing. We've brought on board Greg as well. So you can definitely see that in the financials, that kind of restructuring mode that RIWI is going over, yeah, that would probably be the biggest highlight in 2021.
If I can add, I think there's a few things that will come out as you guys do a bit more of a deep dive on the financials. So we've been investing into our future. So investing in products and in R&D, right? I don't mean necessarily technical R&D, but actual digital product R&D. And a lot of that investment was in Q4 and also in Q1. And so one of the things you'll see is some additional costs in certain areas because RIWI is investing in its future, right? We understand that we need to have more standardized products that people can subscribe to. We understand that there's a cost to do those because you don't have a customer necessarily paying you up front to develop these products. So there's a time frame before these products become profitable. I think we have outlined in different calls that, you know, what the measure is and how many customers generally we need to get it profitable and what our target gross margins are. But you'll see some of that come out in the financials. I think that's probably one of the things that hopefully everyone will start to see is we are investing more and more to build products that we can then resell and hopefully then get scale from.
And is there any certain metrics you think make more sense to watch now closely for investors? Is there, like, you know, typically when you move from a legacy type of product sale to SaaS, you're going to see margin adjustments, right? You can see, you know, higher margins, but, you know, lower revenue. Is that something we should be watching out for?
So right now we don't actually release our margin numbers or anything else. So I'd say we are on a journey right now to adjust and rejig some of our metrics and what we report to the market. So for the next probably 2 quarters, we're probably not going to change our actual reporting, but give us another, call it 3 quarters, 4 quarters, definitely going into 2023, we will start to break out at some point our recurring revenue, our subscription revenue from our project-based revenue. We'll start to report on gross margins. We'll start to report on backlog. We'll start to report on things like pipeline and pipeline added. You know, internally, we're already tracking these things. So I won't say we always did in the past, but from Q1 on, we've brought in a CRM, we've automated a lot of this stuff. And so we're fully tracking all these metrics because we need to understand the metrics ourselves and we need to see those continuously improving. I will say we have target gross margins in the very high double digits, very much SaaS-based typical gross margins. And that is what we are using for our benchmark, right? And when we evaluate a deal, should we go after this project or not? Gross margin is a critical factor we look at. And if we decide to do a deal which does not have, let's say, the gross margin targets, again, very high double-digit gross margins that we expect, then there has to be a justification. Why are we doing it? Is it a first customer that we think is a really strategic customer that has a lot of legs or time, and this is what I'll call a sales investment to get into that customer? Is it because we want to build a new product, we want to get a first customer in it? But there's got to be reasons for us to do anything that does not generate significant gross margins. One, because we understand the value we drive, but 2, it's become a metric that we're tracking and growing, right? I mean, we want to grow. The health of our business is all tied to gross margin.
And apart from sort of metrics or financial things to watch for, I mean, are there other things that investors should watch out for? Are there any sort of catalysts or events that you think could be meaningful to the business?
I mean, I'd say, you know, watch out for our press releases. We're going to be announcing events that we're going to go to. Our goal is to be presenting and exhibiting at a lot more events. One of the things we've identified in our own sales funnel is that when we speak, when we put our key people in front of others, we tend to get a lot of interest. So, you know, in many cases, I always think about RIWI. We talk a lot about the quiet voices. And I continue to think we are the quiet voice, right? We need to stop being quiet. We need to get out there more. And part of us getting out there more in front of the market is going to be about getting the right people that can do that more. Historically, I would say we had Neil kind of front and center, but only Neil front and center in the market, right? We are trying to build a group of thought leaders now across different verticals, different customer segments that we can put in front of basically a larger audience. Because when we do, we find we get a lot of good traction. We get interest in RIWI. So you'll start to see a lot more of those type of things. I'd say stay tuned for you know, things around M&A. I mean, I think that's, again, a key piece for us. And our goal is to get at least a deal done this year. And, you know, I say at least a deal. It may only be one if we don't get any, right? Which is also possible. There's no guarantees, as we all know in this space. You can get very close to the end and then it can fall apart. But, you know, our goal is to really bring in some of those additional things. And I'd say that's what you should watch out for. Oh, and to hire new salespeople.
Gotcha. Listen, before we sort of get ready to wrap up here, is there any, you know, any other things, because of the data you guys have access to, is there any other things that you would suggest we watch out for? I'm not specifically talking about the business, but just generally worldwide, whether it's financial or any of the other kind of data you're looking out for. What do you think as human beings or investors should we sort of keep an eye out for?
So I'll say one big thing, which is, with our partner, David Wu, one of the things that we're predicting right now is the US economy will go to a recession by end of the year, right? So it's a pretty strong, the signals are very, very strong that there's going to be a recession. Now, we are unclear on how long or how deep that recession will be, but we're predicting a full recession in the US by end of the year. And probably, if you talk to David, by Thanksgiving, by US Thanksgiving, not Canadian Thanksgiving.
Gotcha. Fantastic. Well, listen, I think we've covered a lot of the different bases, but what I'd like to do is there anything we missed? Is there any sort of key message or takeaway that you want to make sure everybody walks away with today? Let us know.
I think one thing that I would, when I talk to investors, I always like to let them know is we're on a journey right now. We've gone on this journey of transformation from a project-based to a subscription-based organization. We know that's going to have some bumpiness in that ride, and we need to expect, a few quarters of bumpiness before you start to see top line growth again, right? Just because we need to get through that process. We need to, as we start getting pieces of revenue up front versus the bulk of revenue. Historically, for example, the way we recognize revenue was 75% of our revenue on a project was recognized on launch. Right, and 25% at the tail end. Well, we're really inverting that curve right now. So when you start to look at revenue, you're actually seeing a lot more revenue that is slower on an uptick, but then consistent over time. So I think you're going to see a few quarters of bumpiness, but I actually think the journey itself is going to be significant, and you will really start to see growth, towards the end of the year.
Mm-hmm. This is great. Listen, I've rapidly learned that in this day and age, there's a lot of information out there, and it's no longer the person who has the most information that wins, but the person who can properly parse and screen that information. And I think that's what you guys do extremely well. So congratulations on that, and I hope you get a lot more attention for it. Listen, if anybody wants more information on the company, what's the best way for them to get it?
Feel free to reach out to us. We have investors at RIWI.com. Send us an email. Send an email directly to myself, Anthony, or Neil. We're a smaller organization. Things tend to circulate within us anyway, and we're happy to answer them. We really want to be an investor-friendly company. We're on a journey to become a very investor-friendly company. I'd say right now, we're good at these type of discussions. We're pretty open, but we don't share enough metrics. And again, give us 2-3 quarters and we will start to share a lot more of the detailed metrics of the business so investors can really do proper due diligence on us. We'd be happy to answer any questions from anyone else on the call as well if you want to open it up at any time.
Yeah, it's been open. I'll let everybody, we've got a few more minutes. If anybody wants to ask a direct question, please use the chat function here, and we can fire off a question to the group here. So yeah, we'll let that. I've taken a couple questions here, but. Where else can we take this? I guess, so you sort of mentioned that on last year's numbers, we saw an increase in R&D spend. Can we expect the same sort of thing? Is this, is your next year going to look like another sort of product R&D spend type of year? Or where do you expect that the bigger expense line items are going to look or come from?
The two big investment areas are R&D as well as sales and marketing. So we need to significantly grow our sales team, and you're starting to see parts of it. We brought in a partner manager and again, when we think about partner management, we think about the most quota bearing, generating revenue through partners, through indirect revenue. So we brought in that. We just brought in a new healthcare sales rep. She's actually out of Europe. So, I think this is week 2 for her. We have Natasha joining as the head of our international development, started on Monday, and we're looking to hire 3 more people that are quota-bearing, revenue-generating people. So that's one big investment. And from a technology platform perspective, we are looking to hire a number of back-end developer, front-end developers to really increase our platform as our customers, they're asking us for more. And the good thing is, they're not asking us, hey, just do this and invest, and we're not going to spend money with you. Our customers are willing to spend money with us. They just need us to deliver the solutions, and we're on that journey. So I think you'll see a lot more. Neil, Anthony, anything else that I'm missing that you see from a big investment in 2022 that I didn't mention?
No, I think
No,
also
yeah.
go ahead, sorry.
Sorry, go ahead, Anthony.
Hi. Are there any U.S. election surveys that you're doing right now?
So we just kicked off recently a survey of elections in France. So we're doing the U.S. So we're doing the French elections right now for some customers. We have done some work in some of the early Senate type races in the U.S. I don't know that we have anything ongoing right now. I'd have to double check. But there's, as we get closer and closer to getting past the Senate, going into the actual presidential elections, we typically end up doing work for several customers in that space as well.
Thanks. Paul,
Yeah.
the chat is disabled.
Oh, okay. Well, there you go. I think Trevor was playing around with it. I'm going to blame Trevor for it. So appreciate letting us know here. Okay, well, listen, if anybody else has got questions and the chat function is not working, feel free to just unmute yourself and just be cognizant that the company clearly can only answer certain non-material or non-disclosed questions. So, but feel free to answer any or ask any questions you have, folks. Now, I think what you guys have done is a good enough job, and I think everybody now understands the business well enough that there's very few questions. That's usually a good sign. So we'll
just have one, Paul.
There you go, Russell. Go for it.
How you doing?
Good.
Hey, Neil.
Hey there, how you doing?
Good, thanks. I was just kind of scanning the highlights of 2021, and it reads here that the customers increased by 12.5% and the projects increased by 58%, yet revenue dropped. Can you speak to that a little bit?
I can make a first cut, and then Neil or Anthony, please dive in after. So there's a couple of things. The reason we have more projects than customers is we had multiple projects per customer. So that's maybe the first part of it. But I think you're asking about the revenue drop. Part of the revenue drop is because we've got some customers that are on subscription type products, as of Q4, which we did not have in the past. And so instead of getting all the revenue up front, there's been some let's say more spread out revenue. We also then had a couple of very large projects that closed last year. So we didn't have nearly as many customers last year, but we had 2 or 3 very large ones, and those projects wrapped up in the early part, and then we didn't necessarily have the continuation of that revenue. So they probably started in 19, started in 20, went through half of, let's say, 21, but then we haven't necessarily won those very, very large projects. They were more one-off type deals.
Oh, I see. Okay, so some of the projects now are smaller.
Exactly. Or I'd say, the way I would say it is we had a number of customers that were one-off customers that were not repeat type customers. And one of the things we've been really focused on is our account management function and really building long-term customers that are not going to be one-off customers. We're still always going to get some customers that will do a project with us and then nothing else. But our focus is really on building long-term customers that will have repeat projects. So, the metric that we use internally is called net customer retention. So it's the amount of revenue we get from a set of customers that year over year to see how that's tracking versus kind of the one-off customers that just come to us once.
Right. Okay. So do you think the SaaS revenue will eventually catch up? Because also it's the revenue change too, right? Where it was lump sums before. So do you think over time that SaaS will catch up and surpass?
Absolutely. And there's actually 2 major effects. One is it'll catch up over time and smooth out revenue. The other thing is from a cost and revenue, it also aligns our cost and our revenues, because in the past, we had a lot of revenue recognized up front and then cost that was backloaded. With subscription-based products, it's actually much more aligned. So the smoothing out of those 2 of those, let's say, polar opposite things, revenue and expense, bringing them together on an ongoing basis will give us a better picture of the health of the business.
Okay, great. Thank you very much.
You're welcome.
Thanks, Russell. And I've got another question here, and it's related to sort of customer acquisition costs and value, sort of lifetime value of a customer. Imagine that might be hard for you guys to determine because of sort of the, I don't say the lumpiness per customer, but do you have any sense of any of those metrics right now?
So we're putting together right now our acquisition cost and our lifetime value. It is very different by customer segment, which is why it's not so easy to answer. Again, with our new CRM, we're really tracking these things really strongly. What I'll tell you is we expect the lifetime value of our customers to be going up substantially over time as we're building more of these subscription-based products, and we're focused more on account management. So when we have a customer, and I'll use a great example, Bank of America, World Bank, these are very large organizations. We've announced them publicly in the past, so we can use their names, but these are massive organizations. And in many cases, we wanted a project there, and they might ask us again for another project, and they might ask us a third or a fourth time for another project, but it tends to be one department of World Bank. World Bank is so large that by really focusing the proper account management and putting someone really on that one customer, if we can penetrate 4, 5, 6, 10, 20 other groups within World Bank, our revenue there can go up exponentially. And so, we're going to really be growing those type of customers much more. And that's why we want to focus on the right customers. Gross margins are better on those customers. Your sales costs, your cost of acquisition goes way down on future deals because you don't have to prove yourself. In many cases, we have an MSA because we got into one group. So now it's just about an order form or a SAL for the next deal. So we expect customer acquisition costs to go down. And again, we're still figuring out lifetime value. I wish I had a better answer. I understand that's not a very satisfactory answer, but it's where we are. But I'd say give us a couple of quarters and we will have what I'll call real metrics on it.
Perfect. Well, it looks like we've exhausted the questions. I think this has been a great update. I want to thank you guys for joining us today. The whole team was here, so it's good to see. Just congratulations on another year under your belt and with new stewardship. And so we look forward to catching up with you guys in the hopefully not too distant future. But we've been speaking with the team at RIWI Corp, Greg, Anthony, and Neil. Thanks again for joining us, and hope to catch up with you guys soon.
Thank you, Paul. Thank you, Trevor.
Yeah, thank you, Paul.
Thank you, everyone.
And
Take care. Okay, be well. Thank you.
Bye now.
Bye.